Hey there, future millionaires. Ever wonder how some folks turn their savings into serious wealth? The answer, my friends, lies in the exhilarating world of the stock market. Yeah, it might seem confusing at first, all those numbers flashing by like a runaway train. But trust me, once you crack the code, the stock market becomes your personal money-making machine. We're gonna break it down together, step by step, so you can ditch the jargon and start investing with confidence. We're talking real strategies, smart choices, the kind that can turn your financial dreams into a reality. So buckle up, get ready to take control of your financial future, because by the end of this video, you'll be well on your way to mastering the stock market. First things first, what exactly is the stock market? Think of it as a giant online marketplace, but instead of shoes or gadgets, you're buying and selling pieces of companies. These pieces are called stocks or shares. Now, why would you want to own a piece of a company? Because when that company thrives, so do you. Their success translates into your profits. The stock market is where these transactions take place. Millions of buyers and sellers coming together every day to determine the value of companies big and small. It's a dynamic, ever-changing landscape driven by innovation, economic trends, and even global events. But don't let that intimidate you. With the right knowledge, you can navigate this exciting world and make it work for you. So let's talk about shares. Imagine a company like your favorite tech giant or that coffee shop on the corner. When you buy shares, you're essentially buying tiny slices of ownership in that business. Now, these shares aren't just fancy certificates you hang on your wall. They represent a claim on the company's assets and earnings. Think of it like this. You become a part owner, even if it's a teeny tiny part. The more shares you own, the bigger your slice of the pie. And the bigger your slice, the more you stand to gain when the company performs well. It's like owning a piece of the action, except you don't have to show up for work every day. Don't worry, you won't be getting calls from the CEO asking for your opinion on the next big product launch. But you will have the potential to reap the rewards of their hard work and innovation. Now let's get to the good stuff. How do stocks actually make you money? There are two main ways: dividends and capital appreciation. Dividends are like bonus payments that some companies distribute to their shareholders. It's their way of sharing the profits directly with the people who own a piece of the business. Think of it as a thank you for being along for the ride. Capital appreciation, on the other hand, is when the value of your shares goes up. Let's say you buy a share for $50, and the company does really well. Demand for their stock increases, and now that same share is worth $100. You've just doubled your money. Of course, the opposite can happen too. If the company doesn't perform well, the value of your shares can go down. That's why it's crucial to do your research and invest in companies you believe in for the long haul. Remember, investing in the stock market is a marathon, not a sprint. It's about making smart choices, riding out the ups and downs, and watching your money grow over time. So, where do these stocks actually live? They trade on something called a stock exchange. Think of it as a bustling marketplace where buyers and sellers come together to make deals. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell, the price goes down. It's all about finding that sweet spot where buyers and sellers agree on a price. Now, you don't need to be on the trading floor yelling out orders like you're in a movie. Today you can buy and sell stocks online through brokerage accounts, all from the comfort of your couch. These platforms act as your gateway to the stock market, making it easier than ever to build your investment portfolio. But before you jump in, it's essential to understand the different types of stocks and how to choose the right ones for your financial goals. Alright, so we've covered stocks and stock exchanges, but the financial market is like a giant ecosystem with different players and instruments all interconnected. Think of it as a bustling city with various districts, each with its own specialties. We've got the bond market, where governments and companies issue bonds to raise capital. Think of bonds as loans that you make to these entities, and in return, they promise to pay you back with interest. Then there's the commodities market, where raw materials like oil, gold, and even coffee are traded. These prices fluctuate based on supply and demand, just like stocks. Ever wonder why gas prices go up? The commodities market plays a big role in that. And let's not forget about derivatives, which are financial instruments linked to the performance of other assets like stocks or bonds. They're a bit more complex, but understanding them can open up even more investment opportunities. The key takeaway here is that the financial market is a vast and dynamic landscape. While we're focusing on stocks today, It's good to be aware of these other areas as you become a more sophisticated investor. Now let's delve deeper into the world of stock exchanges. You've probably heard of the big names like the New York Stock Exchange or NYSE and the NASDAQ, but what's the difference? The NYSE is like the granddaddy of stock exchanges, dating back to the 18th century. It's an auction market, meaning buyers and sellers physically meet on the trading floor to make deals. Think old-school charm with a modern twist. The NASDAQ, on the other hand, is a dealer market, where transactions happen electronically through a network of dealers. It's known for listing many technology companies, making it a hotbed for innovation and growth. But these are just two of many stock exchanges around the world. We've got the London Stock Exchange, the Tokyo Stock Exchange, and countless others, each with its own listing requirements and trading hours. The point is, the stock market is a global phenomenon. And as an investor, you have access to companies and opportunities from all corners of the world. Pretty cool, right? Now, have you ever heard someone say the market is up today? They're not talking about a specific stock, but rather the overall performance of the market. That's where indices come in. An index is like a basket of stocks that represents a particular market or sector. The most famous one is the Dow Jones Industrial Average, or the Dow, which tracks 30 large publicly traded companies in the US. Then there's the S&P 500, which includes 500 of the largest US companies, giving you a broader view of the market. And let's not forget about the NASDAQ Composite, which tracks thousands of companies listed on the NASDAQ Stock Exchange. By following these indices, investors can get a sense of how the overall market is performing. If the Dow is up, it generally means the market is optimistic. If it's down, well, you get the picture. Think of indices as the pulse of the market, giving you valuable insights into investor sentiment and economic trends. We've talked about the US stock market, but remember, the financial world is a global dance floor. International markets offer a wealth of opportunities to diversify your portfolio and potentially boost your returns. Think about it. Emerging economies in Asia, established powerhouses in Europe, and resource-rich nations in South America, each region brings its own growth potential and risks to the table. Investing in international markets can help you tap into these diverse sectors and potentially reduce your overall portfolio risk. It's all about spreading your bets and not putting all your eggs in one basket. Of course, investing in international markets comes with its own set of considerations, like currency fluctuations and geopolitical risks. That's why it's essential to do your due diligence and choose investments that align with your risk tolerance and investment goals. Remember, diversification is key to building a resilient portfolio that can weather market storms and deliver long-term growth. And international markets play a crucial role in achieving that balance. All right, folks. Now that we've demystified the stock market and explored its various components, let's talk about the heart of the matter: how to invest intelligently and make your money work for you. Investing isn't about gambling or chasing after the next hot stock tip. It's about making informed decisions based on research, analysis, and a solid understanding of your financial goals. Whether you're a seasoned investor or just starting out, having a sound investment strategy is crucial to navigating the market's ups and downs and achieving long-term success. Think of it like building a house. You wouldn't just start laying bricks without a blueprint, right? The same goes for investing. You need a solid plan, a clear understanding of the materials you're working with, and a vision for the final outcome. One of the most important aspects of intelligent investing is fundamental analysis. This involves digging deep into a company's financial statements, industry trends, and competitive landscape to assess its intrinsic value. Think of it like being a financial detective. You're looking for clues that reveal a company's true worth, beyond the hype and market noise. You'll want to analyze key metrics like revenue growth, profitability margins, debt levels, and cash flow to determine if a company is financially healthy and positioned for future success. It's not just about crunching numbers, though. You also want to consider qualitative factors like the strength of the management team, the company's competitive advantages, and its overall industry outlook. Now, while fundamental analysis focuses on a company's intrinsic value, technical analysis takes a different approach. It's all about studying historical price charts, trading volumes, and other market data to identify patterns and trends. Think of it like reading the waves of market sentiment. Technical analysts believe that history often repeats itself in the stock market, and by identifying these recurring patterns, they can potentially predict future price movements. They use a variety of tools and indicators, such as moving averages, MACD, and Bollinger Bands, to identify potential buy and sell signals. It's important to note that technical analysis is more short-term focused than fundamental analysis. It's often used by traders looking to capitalize on short-term price fluctuations rather than long-term investors seeking to build wealth over time. Now let's talk about a crucial aspect of investing: risk. Every investment comes with some level of risk, and it's essential to understand your own risk tolerance before putting your hard-earned money on the line. Generally speaking, higher potential returns come with higher risk. For example, investing in a high-growth tech startup might offer the potential for explosive gains but also carries a greater chance of loss compared to investing in a well-established blue-chip company. Your risk tolerance will depend on factors like your age, investment timeline, financial goals, and comfort level with market volatility. It's important to find the right balance between risk and reward that aligns with your individual circumstances and investment objectives. Now let's put it all together and talk about building your dream portfolio. This is where you get to put your knowledge and strategy into action and start investing for your future. The first step is to determine your investment goals. Are you saving for retirement, a down payment on a house, your kids' education? Having clear goals will help you determine your investment timeline and risk tolerance. Next, you'll want to choose your investment accounts. You can open a brokerage account, a retirement account like a 401k or IRA, or even a robo-advisor account that automates your investments based on your risk profile and goals. Once you have your account set up, it's time to diversify your portfolio by investing in a mix of different asset classes, such as stocks, bonds, and real estate. Remember, diversification helps to mitigate risk and enhance potential returns. Finally, remember to review your portfolio regularly and rebalance it as needed to ensure it still aligns with your goals and risk tolerance. The market is constantly changing, so it's essential to stay informed and make adjustments as needed. So, there you have it, future millionaires. We've journeyed through the ins and outs of the stock market, from understanding what shares are to exploring the vast landscape of the financial market. Remember that feeling of being overwhelmed at the beginning? Look at you now, armed with knowledge and ready to take on the world of investing. The stock market isn't some exclusive club reserved for Wall Street hotshots. It's an accessible avenue for anyone looking to grow their wealth and achieve their financial dreams. And the best part, you don't need to be a financial whiz to succeed. With the right information, a solid strategy, and a healthy dose of patience, you can make the market work for you. Now I know what you're thinking. This is a lot to take in, and you're right, it is. But remember, investing is a marathon, not a sprint. You don't need to master everything overnight. Start by setting small, achievable goals like opening a brokerage account or investing in a low-cost index fund. As you gain experience and confidence, you can gradually expand your portfolio and explore more sophisticated investment strategies. The key is to start now. The sooner you begin investing, the more time your money has to grow and compound, thanks to the magic of compound interest. To help you on your journey to financial freedom, I've compiled a list of resources in the description below. You'll find links to reputable financial websites, educational articles, and even investment tools to help you make informed decisions. Remember, knowledge is power, and in the world of investing, it's the key to unlocking your financial potential. Don't be afraid to do your own research, ask questions, and seek guidance from trusted financial advisors. The more you learn, the more confident you'll become in making smart investment choices that align with your goals and risk tolerance. And hey, while you're down there checking out those resources, don't forget to hit that subscribe button and ring the notification bell so you don't miss out on any future videos packed with financial wisdom. And before you go, share your thoughts and questions in the comments below. What are your biggest takeaways from this video? What investment topics would you like me to cover in the future? I love hearing from my viewers, and your engagement helps me create even more valuable content to empower you on your financial journey. Remember, the stock market is a journey we're in together. Now go out there, make smart investments, and let's build that brighter financial future, one stock at a time.